Should you get a fiat dollar loan to buy Bitcoin? This might be something you're thinking about doing because you want, of course, to build a bigger stack and you want to bring your future purchasing power to the present to just use that to acquire the scarcest and best asset of all time. Makes a lot of sense. However, some people might be turned off from this because of the idea of a loan and borrowing money and debt. And debt is risk, because you have the risk of ruin. You have the risk of not being able to repay it. You have the risk of all sorts of different forced selling to have to pay that debt, or the interest rate outpacing the asset, all sorts of different types of risk. And some people are very risk averse when it comes to this, which makes sense. Now, I'm going to explain a couple scenarios here and showcase how a Bitcoin-backed loan or buying Bitcoin with a character-based loan or balance transfer loan, or however you get a loan, might make sense because you're buying an asset that can outpace the cost of that loan. And you're shorting the dollar, which also gets worth less every single year because of money debasement. Now, I'm going to get into all this. I'm going to show a nice little visualizer, and we're going to explain why a Bitcoin loan might make sense for you. My name is Forrest Hodel. I'm a Bitcoin educator, and I do one-on-one client sessions. If anybody wants to book a session with me to go over Bitcoin best practices, security needs, and all of that, you can check that out in the link in the description. Now, this video is inspired by Rajat, who made a similar video just recently talking about his opinion about buying Bitcoin with a loan, and I will link that in the description. It's also inspired by him because he shares a spreadsheet in that video, which I actually turned into a visualizer tool and website for anyone to use. Since his spreadsheet is open source, I use that in my open source project called Pleb Tools, which is right here. This is a Bitcoin loan LTV calculator. So LTV stands for loan to value, which is based on a loan structure where you're securitizing that loan with an asset. And that asset in this case is Bitcoin. You put up maybe $100,000 worth of Bitcoin and your loan to value is 50%, which means you can take out 50% of that value right away as dollars. So you're taking out $50,000. And then your loan to value is going to fluctuate based on the loan amount increasing based on the percentage that you have to pay if you're not paying that off, or the value of Bitcoin going up or down. Now, just put really basically, you want your loan to value to go down. You want it to be less. Say your loan amount stays at 50,000. If Bitcoin's price goes down, your loan increases in the percentage of size compared to the Bitcoin. So it goes up from 50 if the value of Bitcoin goes down. If Bitcoin's price goes up, the percentage that makes up those two things combined, the Bitcoin accounts for more of it and the loan accounts for less of it. So the percentage is sort of more tied to, if you're trying to conceptualize it, it's tied to the loan amount. So the loan becomes less of a percent, and therefore your LTV falls from 50 downwards if Bitcoin's price goes up. Hopefully that makes sense. It can be a little bit hard to conceptualize if you're completely unfamiliar with the idea of a loan to value percentage. Now, I mentioned earlier, character-based loans, balance transfer loans. These are both things I've talked about in the past. Balance transfer loan is when you take, you arbitrage the ability to have these promos on credit cards where they'll offer you 0% interest rate for a year, and you transfer your balance from credit card to credit card and get really close to 0%. There might be a fee or something like that that you factor in as a percentage. You might also be able to get a character-based loan that is similar or less than even a securitized loan. Maybe this makes sense for a margin loan. There's also, a HELOC, a home equity line of credit. There's all sorts of different types of loans out there. I'm going to talk about a Bitcoin-backed loan in this case, and therefore talk about the loan to value. But if you're just doing a character-based loan, that's not going to apply to you. But there will be other aspects in this video that are going to directly apply to you because you're borrowing money and buying Bitcoin. So stay tuned for all of that. So let's take a look at this calculator here. Now we just have Bitcoin's price at $100,000. You can accurately put this in and get the exact amounts that you want based on that. Loan to value 50%. This is like a let-in loan that basically I have in here. Interest rate is 12.9. I think it can even be down to 12.4 through let-in. You might be able to get an interest rate for 10%, 8%, 5%, whatever it is. You can add it in here and it's going to change everything for you. Bitcoin's growth rate. Now, this is what's interesting. So basically, a really simple way of thinking about borrowing money to buy Bitcoin, and there's other variables beyond this, but you need to think about Bitcoin's growth rate, so its value on average every single year, outpacing the guaranteed interest rate that you're paying every single year. And if it does, then it makes sense. Now, it might not make sense for other reasons, but this is just a really general way of putting it. Let's go to 48 months. So we're refinancing this every year. There's a refinance option within Let-In to do that. So we're going to do this for 4 years. And the risk setting here is the liquidation is 80%. Now let's calculate this. And we have this crazy looking graph over here, which I know looks a little wild, but let's look a little bit more in depth about what these crisscrossing lines are. So first off, the blue here is liquidation price. So right off the bat, if you're starting off on month 0, Bitcoin value, the asset that you're using to secure this loan, is $100,000. Your loan amount is in red here. It's this red one, and it is worth $50,000. So your loan is $50,000 right away. That's what you have to repay at a certain point. But I'm actually going to show you how you never have to repay, which is really interesting. I'm going to talk about why this all makes sense eventually. Your liquidation price is above that. So your liquidation price is 80%, right? So your loan to value basically has to go to 80% for you to get liquidated. And as you can see here, these two lines actually go up and to the right. Now, the reason for that is because of this 12.9% interest. So your loan amount is actually increasing. Month 2, your loan amount is 51K. So you've acquired 1K of interest within a month. And you see month 12 here, this loan has cost you $7,000. That's the 12.9% on the 50K initial investment or initial loan. And the liquidation price has gone from 63,000 to 71,000. So Bitcoin has to go down within 1 year here, has to go down to 71K per Bitcoin at a starting price of 100K for you to get liquidated at the 80% loan to value. That's essentially the idea here. And it could do that, right? What this graph does not show well is the volatility of Bitcoin. So Bitcoin is in here in the green, and it's showing that it's just up and to the right because its only input here is that it grows at a 25% annual growth rate. And you can see here, it's just outpacing. So percentage-wise, your Bitcoin is outpacing the loan amount, even though the loan amount is growing as well. So up and to the right, but up and to the right even more so with your Bitcoin. So at the end of 48 months, your loan amount is $84,000. The loan that you have to pay back is $84,000, even though you started with $50,000, and this is 4 years later. However, the Bitcoin that you've put up as collateral, this isn't even reinvesting that $50,000 back into Bitcoin or anything like that. The Bitcoin itself is now worth $244,000 at a 25% annual growth rate. So you could easily take $84,000 worth of that Bitcoin and pay off the loan, and you now have more purchasing power than you started with. Plus, you were able to extract 50% of that value at month 0, which you could reinvest into Bitcoin. You could do all sorts of things. If you reinvested into Bitcoin at this 25% annual growth rate, you're now outpacing the 12.9 that it cost, and it just makes a lot of sense to do something like that, right? So here in the orange, this cross line here is your loan to value. So at month 1, your loan to value is 50%. So we can see up here 50%, your loan to value is 50%. And month 2, right, with not accounting for any volatility, just accounting for these simple annual metrics here. Your loan to value has gone down to 49.6, and month 12, we are at 45.4, and all the way at 4 years, the loan to value is 34%. So your loan gets safer and safer as the value of Bitcoin outpaces the interest rate. So you're more and more collateralized and less likely to have a margin call or get even close to the liquidation price. You can also see this here just written in text in a plain way right here. Your Bitcoin price, collateral value, your loan amount, and your LTV. Your LTV just dropping month over month based on Bitcoin outpacing the cost of the loan and the interest. Really simple risk management, and I actually do have this here in the general risk management for loans. Loans are inherently risky, but you can have them as a small percentage of your portfolio to amplify gains if you have an asset that will outperform the interest rate. It can be that simple over a period of time. If this didn't, now, of course, again, this doesn't account for volatility. However, with something like Ledin, or even I believe Coinbase has this, and Strike I definitely know has this, you can refinance your loan. So if you were to refinance your loan after 1 year, your Bitcoin has gone up to 125,000. Your loan to value is now 45%, and your loan amount is 57K. You can refinance and extract out that 5% and make it the loan to value back up to 50%, or you can refinance and be over collateralized. So you can essentially do this indefinitely. Now, the reason this works indefinitely, or maybe not indefinitely, but as long as Bitcoin's growth rate outpaces the interest rate for a fiat denominated loan, you can do this because you can always just refinance. As long as your Bitcoin value has outpaced the interest rate value increase on that loan. So this seems crazy, but essentially you never having to pay back the fiat denominated loan. You're just refinancing, recollateralizing, redoing the loan year after year, and the Bitcoin value is outpacing the interest rate. And the reason this also works, right, is Bitcoin's value proposition is directly tied to the fall of fiat and to the collapse of the dollar, right? As more money debasement happens, Bitcoin is going to appreciate because it's a bet against that. It is a sovereign asset that does not suffer from centralized control and inflation. It has fixed issuance and a max supply. And the thing that you're borrowing and the thing that is raising in value is a fiat denominated loan. So not only is the collateral outpacing the loan, but fiat is probably going to become, well, I mean, almost for sure going to become easier and easier to come by as your wage lags fiat debasement and the expense of life and all of that. However, it still rises over time and fiat becomes easier and easier to acquire more nominal amount of it, even though that amount buys less and less. So this loan, even though it increases at 12.9%, you have to think, what is money debasement rate at? Is it 4%? Is it 2% like they hope inflation is? Is it 5%, 10%? And then you can cut that off of the interest rate amount. So in 4 years, Bitcoin's price might be 244,000. I would say this is actually really pretty low for what Bitcoin's price could be. However, we'll just stick to this. And this loan cost or the loan amount could be $84,000. But what is $84,000 worth in 4 years? How easy is it to acquire $84,000 from your income, from your assets, right? Like Bitcoin. By taking out a fiat denominated loan, you are essentially shorting the dollar. And if you use that loan to buy something like Bitcoin, you are longing the asset that is scarce. So you're selling the asset, you're selling beyond even what you currently own because you're getting into debt. You're selling the asset that is abundant, that is being debased, which is dollars, and you're buying the scarce, desirable asset that is Bitcoin. And as long as, again, the growth rate of Bitcoin over time increases more than the interest rate and the duration of your loan is refinanceable, it doesn't come due, where you have to make a big lump sum, maybe when Bitcoin's price is in a bear market or something like that, then you are outpacing the cost of the loan with the growth of the asset. This is what this all comes down to. This is exactly what Saylor is doing with MSTR. He is acquiring cheap debt and he is buying Bitcoin, and the value of that Bitcoin is rising faster than the value of the loan that they have or the cost of the loan. And they're using something that never comes due, which is perpetual preferreds. So you can emulate this to some degree by having loans that are refinanceable. They come due, but you refinance them. There is duration risk within there, as I said. Say in the first year when it comes due and you have to refinance, say Bitcoin's value has actually gone down, right? It's not worth 100,000 anymore. Now you need to add extra collateral to refinance at that 50%. Now the loan amount is at 57,000. You actually need $114,000 to have a 50% loan to value. So you need to add in extra Bitcoin. You need to pay off some of that loan. You can only refinance to that 50% level. So you are forced to sell or forced to transfer and over collateralize that loan again. And the worst thing you can do as an asset holder is be a forced seller. That's why you need to avoid the liquidation price. That is why you need to have extra Bitcoin on the side, and to do this only with a small percentage of your portfolio, because you want to, at all costs, avoid to be being a forced seller. Now, the other advantage here, right, is in most jurisdictions, and of course you need to look this up for yourself, but in a lot of jurisdictions, taking out a loan is not seen as income. It's seen as a loan. And so therefore, there might be a tax advantage reason to actually take out a loan instead of actually selling your Bitcoin to do so. So there's different tax advantages to doing this. That is something that is really, really important here. However, if you got liquidated and you have to cover your loan with part of that Bitcoin, that's going to be a taxable event, depending again on your jurisdiction. You need to look that up and make sure for yourself. So if you're looking at this ideally, you would want to do this in a bear market, of course, right? Where Bitcoin's value is the lowest, you're taking out fiat in that, and you're going into a bull market, and Bitcoin's value is going to rapidly outpace the loan amount, and you're never getting anywhere close to your loan to value. Now, if you could do that, you would be, you'd be set, right? Because you could do this in massive scale, knowing that you're in the bottom of a bear market and that the reversal is just coming and all of this, right? Like you could just bet the farm if you knew how the market is going to go at every single point. Now, that's not the case, right? And people say, well, we're in this extended bull market. There's a muted bear market coming. There's no bear market coming. There's all sorts of different people with different opinions. Ideally, you would do this when Bitcoin has a lot of room to go. However, you cannot predict that. You can try to time the market as much as you possibly want with adding leverage to your balance sheet with debt like this. However, that is going to be, you're going to have a very small percentage of actually doing that accurately. So more so, you should focus on the things you can control, like prudent risk management. How much of this is going to be a part of your portfolio? How much debt are you going to take on? In what size are you able to do this and still cover it if Bitcoin's value goes down to this price or this price or this price? Are you able to put more Bitcoin as collateral for this Bitcoin backed loan? Or if it's a character-based loan, what is the worst case scenario, right? Play all of these worst case scenarios out and mitigate all of those as best as possible. That is what you should focus on. Focusing on timing the market is a fool's errand. Focus on the things that you can control, the things you can predict, which is prudent risk management. Positioning size is a big part of risk management, and being ready to move value and over collateralize these loans if needed, by moving Bitcoin or by wire transfer to pay off the fiat amount. Now, my personal opinion, I love the idea of just rolling these constantly as Bitcoin outpaces the fiat cost of the loan, and just doing that indefinitely and taking that initial amount and buying Bitcoin, maybe buying something like MSTE in a tax-free savings account if you're in Canada, using those dollars to buy more Bitcoin and send that Bitcoin as additional collateral to over collateralize that loan, and you're buying Bitcoin with it. There's a few different things you could do. Then there's a few different videos that I've made about different strategies to do. But overall, on the surface, this just makes a lot of sense. Now, the volatility is the risk, right? If month 2, Bitcoin has a freak fall all the way down to the liquidation price of $64,000 on month 2, you're getting liquidated and there's a forced sell and your loan's getting covered and you're getting back what's left over. But you have a taxable event. Maybe it's a capital loss at that point, or for you. So maybe that's a write-off to some degree, but you're still a forced seller. You have to buy back in, all this kind of stuff, right? So you want to be aware of the volatility. You want to be able to over collateralize these loans, and maybe a 50% loan to value to start with is higher than it should be. Maybe it should be 30%. Maybe you should really over collateralize and only borrow a small amount so that you're very secure with an asset that is very volatile. That might be something you want to think about. Now, if you want to check this loan calculator out yourself, run a few scenarios, figure out what's best for you. You can also, get rid of a few of these to make them cleaner, figure out exactly what you're looking at here. You can go to plebtools.com/BTC-loan-LTV. There's a link for that in the description. There's all sorts of different tools here that I'm actually going to use for a few different videos. So stay tuned for those. If you actually go to the home here, this is an open source project that I'm working on to provide as many useful tools for people as possible. And this is all on GitHub to download and run locally if you want. Privacy first, all the data, if you actually input any of your own data on here, if you're worried about privacy, it's all stored locally in your browser cache, and we don't actually have any access to the information that you've input. So, that's how we keep this somewhat privacy focused. And if you want to support the channel, and if you want to support plebtools.com, this project that I'm working on, any of these links go to supporting it. You can donate directly to PlebTools, and you can basically use all of these to support the channel. Bitcoin Well is where I buy Bitcoin. BlockStream Jade is how I store it. Use Stampseed, 15% off to protect your Bitcoin seed phrase and backups. You can run your own Start9 and get 5% off. You can book a one-on-one coaching session with me. Obviously, subscribe and watch on YouTube. And you can earn free sats on Sats Arcade, another project that I'm working on, and you can donate directly. So thanks everybody for checking out this video. What do you guys think about Bitcoin loans? What do you think about Bitcoin backed loans? Do you think it's a good idea to short the infinite money printing dollar and buy the scarce desirable Bitcoin? In my opinion, yes, but you have to do it responsibly. You have to think about the worst case scenarios and not just the best case of Bitcoin just beating everything. Of course, it will in the long term, but can you hold past, the volatility? Will you get liquidated? Make sure that you don't. Make sure you protect yourself and stay sovereign. Stay in Bitcoin, cold storage. It's the best asset of all time. And we'll see you on the next episode of Bitcoin, Not Crypto. Thanks, everybody.